Good morning. Welcome to the Forex Pro Charts weekly analysis for the week of January the 9th, 2011. This will be our first analysis in a few weeks due to the holidays as well as to some medical issues that came up. Hope everyone had a great Christmas or holiday season and that you're ready to go with the new year. The markets have started moving again. They're usually a little bit slow over the holidays, but they have started moving again, and we're looking forward to a great year trading the Forex Pro Charts way. Okay, this week we're going to be looking at the Euro USD, and we start by looking at the monthly time frame. We see that so far this month, price is down on the euro, but really when we're looking at the monthly time frame, we are a little bit more interested in the overall price direction. We see that price had come down close to the lower edge of our trading field here, and then had retraced up for several months, hit this intersection of extended trend walls slightly below the monthly armpit, and has now been retracing significantly. So really price currently is in an overall downtrend. This was a retracement, but now price has resumed its downtrend. But it is in the middle really of our playing field. So we are looking for trades in either direction. We're not too worried at this point about price being at a position where it might be here, where we'd be looking for a reversal and having to take that into account. So it's not in that area on either side. So at this point, we're looking for price to continue down, at least until it hits this zone here, and probably to continue down and to back to somewhere in this area and then move back up. Let's go ahead and take a look at the weekly charts. Okay, so looking at the weekly charts, we see the same thing where price had been moving down for several weeks with just a couple of candles in an uptrend. We see that last week price moved down very strongly from this zone here, which had been formed very recently. We'll look at that a little bit more closely on the daily chart. So we see price moving down to these two stacked zones on the weekly chart, and we see that the top zone looks to be the little bit better one for trading because we see the pattern, the drop base rally pattern on the weekly chart, in addition to that pattern being present on the daily chart, which it always is when we form our zones. We see that this lower stacked zone, that pattern was not present, and it was simply part of an overall uptrend on the weekly chart. But with this upper zone, the pattern was strongly present, and we see that obviously we have well in excess of a 3-to-1 reward to risk ratio. So we see that price moved up on the weekly chart very strongly out of this upper zone, moved strongly out of this lower zone as well. Many traders like to trade both of the stacked zones. In this case, it looks like the risks are very reasonable on both zones, and that would be a good option. But if you were picking one, this upper zone is probably the most likely and the stronger. And now that price has moved through these trend walls, we would expect to see price continue down, and then that we would at least be able to get a bounce off of that 60-minute armpit in this upper zone. Then, of course, we have another zone down here, and then we'll be approaching the weekly armpit, but we wouldn't expect to see that happen this coming week. Should price reverse and move up, this zone has already been hit once. It didn't really have the 3-to-1 ratio, so I'd want to exercise some caution with this particular zone. We do see another zone here, does not have the pattern on the chart, but does have a fairly low risk, and does have at this point especially a 3-to-1 ratio. So we could trade the bounce off there, and then of course this zone would be the one where we would be looking to see the biggest potential for price movement, because we've got that pattern on the chart. Let's go ahead and take a look at the daily time period and examine that a little bit more closely. Okay, so looking at the daily chart, we see, of course, the same thing. We see this price action at this zone in a little bit more detail. We can see where price moved out, did not achieve a 3-to-1 ratio, came back up into the zone, bounced off this trend wall prior to reaching the 60-minute armpit and then moved strongly down, and looks, if it continues down, like at that point it will achieve the 3-to-1 ratio. So this zone, we have not cross-hatched it. If price moves all the way back down here and then up, we could probably expect to see a bounce off the 60-minute armpit. But because price did leave the zone without achieving a 3-to-1 ratio before it came back up, this zone would be a little bit more suspect. Although it did move down, I'm huffing and puffing. It did move down nicely out of this zone. This is one of those zones where you kind of go, yeah, looks good here, didn't look so good here. So we'll really want to wait and see what price does, and then a lot of times our final trading decision will be made on how price approaches back up into the zone. If it approaches very strongly, that's usually a good indicator. If it dilly-dallies around and eats up a lot of orders before it reaches the 60-minute armpit, then that's generally not as good an indicator. So we'll be looking at that a little bit more closely should price resume. But at this point, we do expect to see price moving down to this zone. And as we said, this upper zone appears to be the better one for trading, because it had the pattern on the weekly chart as well as on the daily chart, and we can see here that it has a fairly reasonable risk. This 60-minute armpit is right around 1.2640. You'd have to refer to our analysis to see exactly where it was. And that zone ends right about here where this gray line is. So it has a fairly reasonable risk. But because of the very minimal risk on this second zone down here, a lot of traders will decide to trade both zones. This 60-minute armpit is very, very close to the end of the zone, so you could trade both of them with fairly reasonable risk and possibly capture or likely capture pips, at least the 20 pips for the bounce on both of those zones. But again, if you're choosing one, we would think that this upper one would be a little bit stronger, again, because of the pattern on the weekly chart. Now, the one thing that we don't like about this zone is the way price did at the beginning. You can see it came in, it moved up, came back, and then moved up strongly. We would have preferred for none of this garbage to have been here, for price just to have come down. Say come down right to here, skipped all these candles, and then moved all the way back up nicely like it did here. So that's just something to kind of keep into account, and that's one reason why we recommend strongly that you demo before you go live, and that you begin going live with very small size lots, so that you can really see these types of factors do play a part in how the zones perform. They're listed in our odds enhancers, and it's easy to forget about them, but they are important, and you do need to take them into account. Doesn't mean you can't trade a zone, but may definitely affect the size of the lots you take, or how many lots you put, how long you stay in, how aggressively you protect your profits. Let's go ahead and take a look at the hourly chart. I don't believe we had any trades last week on the EU. Let's go ahead and take a look at the hourly chart and just see what price action looked like there. Okay, so looking on the hourly chart, we did not have any trades this past week. Price did move up into this zone at 1.3363, but prior to reaching the 60-minute armpit at 1.3462, it did bounce off of this trend wall. You can see it bounced there, bounced again, and then moved all the way down. So when price does come back up to this zone, this will be something to keep into account. Even though price did not reach the armpit, it did move into the zone twice, making that, again, weakening that zone. I would probably consider this one revisit because it didn't move out very far. But some of the other traders in our group would consider it two revisits. So you will need to look at that again, the number of revisits, and as an odds enhancer. Price did move strongly out this last time, and if this risk level of about 40 pips is acceptable to you, you may wish to try to get the 60-minute bounce on any subsequent revisit to this zone. But again, you just need to remember that it has been revisited. Now remember, this is the hourly chart, not the daily chart when you're counting your revisits. But again, remember that it did come back up into this zone, eat up some orders, spent some time around here, and that will make you want to at least very aggressively protect any profits that you get for this zone, because it's very likely that price could continue to move out of this zone and move on up. Okay, so that is it for our analysis on the EU for the week of January the 9th, 2011. Again, Happy New Year. We are glad to be back after the holidays and our brief medical absence. And we are looking forward to a good year of trading. Remember that for more information or to subscribe to our full analysis and charting services, you can go to www.forexprocharts.com. You can get a free demo week on our on whatever level of membership you would like, where you can go into our education areas and check out more information on how to trade the Forex Pro Charts way with the zones, and get some information on how those work. We would welcome you, love to have you as a demo subscriber, and then hope that you'd find our services valuable enough to continue to subscribe. Looking forward to seeing you all back again next week.